All right. I'm Michael Hartzman. Today is Tuesday, April 29th, 2025. And I'm on as always with my partner, Dominic Tavella. Both of us from Long Island this evening. How are you, Dom?
Doing great on this beautiful spring day. So nice to be in New York this time of year, Mike.
Yeah, spring has finally arrived, which I'm, grateful for because, at the beginning of April, forget March going in like a lion and out like a lamb. April was really unpleasant for the first couple of weeks. So me too. I'm kind of happy. Um, the things are more pleasant and sunny. And I'm going to use the corny segue because it was there. We could say the same thing for the market, Dom. The first 2 weeks of April were really, really ugly. April 2nd is when Trump had his tariff press conference. And the first 2 weeks were really, days like we haven't seen in a long time. And for me, in the last 2 weeks, with the bond market really expressing its feelings about these tariffs, it looks like um, Trump has seen the light, and the market appears, for the moment, to have put in a little bit of a bottom. It's been kind of calm, I'm afraid to say, almost the last 2 weeks.
Well, calm in the context that it's been up, as opposed to these just incredibly volatile negative days, weeks that we had prior to that, Mike. So the numbers you usually rattle them off, so I'll take your lead on this one. But last week, on the average, the markets were up between a low end, I would say 2.5%, a high end about 6%. We'll say 5% for the S&P in one week.
Yeah.
Boy, having markets up that much in such a short time frame makes the weather look a little prettier and the skies look a little bluer and clients' stress level a little lower. So we're grateful for that, Mike. The stress level that clients were feeling, we can talk about this logically and we can try to create and review a logical game plan. But emotionally, this was very difficult for people to look at and live through. And I'm not saying we're done by a long stretch of the imagination, but it's a little easier to look at the accounts and the markets today than it was 2 weeks ago.
100%. And what I mean by calmer, I mean we haven't been dealing with literally with headlines at 10 a.m. and then had to counteract the headline at 2 p.m. where the market's getting whipsawed. And what I want to talk a little bit about, because we haven't done a podcast since, is Dom, the Treasury market spoke 2 weeks ago. Treasury markets sold off. And if you can, it's a little bit of an arcane subject for our listeners, what happened and why it mattered. So, the headlines were Trump blinked when the Treasury market sold off. So, why don't you get into that a little bit and try to explain to our listeners what that all meant in plain English?
I'll try, Mike, and please jump in if I don't do a clear job of explaining this. But normally, when you think about the stock market selling off, there's fear, there's concern. So the stock market sells off, and usually you go, okay, I took my money out of stocks. Where does that money go? Historically, it's called a flight to safety. People take that money out of the stock market, and they'll typically buy government bonds. So it's literally going from something that theoretically is volatile to something that relatively stable and safe. And what we saw in a very, very unusual, I think, Mike, you would answer the same. I don't remember the last time in my history in this business I remember something like that. But not only were people selling stocks, but they were also selling government bonds. Instead of buying them, they were selling them. And then to kind of throw insult to injury, the trifecta, they were selling the US dollar. So from our end, we never got a clear picture, but it was clear that foreign investors were selling stocks, selling US bonds, selling US dollar, repatriating those currencies into euros or yens or wons, but foreign currencies. And it looked for a while there a really, really frightening picture where everything was being sold, Mike. And literally the flight to quality didn't happen. And clearly it had to do with Trump's issues and concerns revolving around tariffs and his opinion about the Federal Reserve and Federal Chairman Powell. So all these things kind of came into this perfect storm where everything was going down.
You did a great job on that. And there's nothing I could add to clarify anything other than me having an opinion that the selling appeared to be systematic, meaning these countries, China, Japan, Canada, we go on, they are large buyers of our US treasuries. And to me, Dom, it was basically sending a screw you to the Trump administration with these tariffs saying, we're going to force your hand a little bit. And I don't think the Trump administration anticipated that happening, if that is in fact what actually happened.
And believe it or not, Mike, even today we don't know what
Mhm.
actually happened. But let's not kid ourselves. If we look at one, two, and three, the largest country in the world that holds U.S. government bonds, the second largest, and the third largest. I'm going to talk about Europe as an entity. You got China, you got Japan, you got Europe as the three largest countries slash entities that hold U.S. government bonds. To see selling in the U.S. government bond market, and then I think this was the big tell, the big secret, right? The US dollar was being sold. So if I'm a foreign country, I'm a foreign investor, I have to sell dollars in order to buy my euros or wons or yens. So that transaction put downward pressure on dollars, on US government bonds, on US stocks. And whether it was intentional to send a message to this administration or unintentional, hey, we want to repatriate our currencies and our assets. We don't know, but the message was pretty clear, Mike. That was really shocking to watch in our industry, see it happen.
Yep. And as a result, I mean, since then, the Treasury has calmed down, that the bond market's calmed down. Trump isn't talking about firing Powell anymore or insulting him. So again, all these things lead you to believe at the moment that we have, hopefully stabilized here and hit a bit of a bottom. But we can't end this segment without also talking about the fear, that this administration is not going to act quickly enough and get deals done fast enough, and whether they cause a recession or not. So I think I'm of the personal belief, I think you may agree, that we don't think a recession is imminent, but it's a far greater likelihood today than it was January 20th when he took office. Would you agree with that?
Yeah, Mike, and we brought this up on prior podcasts that we've met with, and most recently with J.P. Morgan, right? We were in Manhattan in their offices talking to their economists and portfolio managers, and the possibility of a recession where it was almost non-existent in January. Today, depending which company you listen to, probably low end, I would say 30%, Mike, and high end, I probably would say 60%. So somewhere plus or minus 50% probability, possibility that we would have a recession this year. But here's the big, big unknown. The unknown. We don't have clear sight of what the tariff picture is going to look like, what the pressure is going to be on U.S. companies and U.S. consumers. And it's this unknown that is definitively slowing economic growth right now.
And here's the other part of that unknown. On Friday, we were invited to a webinar with Dr. Jeremy Siegel from Wisdom Tree. And Dr. Siegel, who you and I both have enormous respect, he's been a guest on our
Great deal of
show,
respect. Very, very bright man.
thinks that the Federal Reserve is wrong and they should cut interest rates right now. Today on CNBC, another person we have great respect with, who we've met frequently, is Rick Reeder, the head of fixed income at BlackRock. And he said that Jerome Powell is 100% correct in not raising interest rates because of inflation fears. So here are two really, really smart guys, right? Who who are extremely successful and renowned, and they have polar opposites opinion because of what you just said, the great unknown.
Yeah, and listen, we both could not have more respect for the two individuals that you mentioned. We've had long history with both of them, incredibly bright human beings, and to the extent that their crystal balls work, have been very, very good at giving us insight about what the future economic growth markets look like. Having said on both those gentlemen could be 100% correct or not, but again, this idea of clarity, right? So I think we're fair to say that if Trump wants to leave the tariffs exactly where they have been proposed today, I would say the odds of recession might be better than 60%. And in that context, you would go, hey, Federal Reserve, do something now. Do something today to help economic growth so that we don't go into a recession or the odds decrease anyway. And then the flip side of it is no one thinks, not even the Trump administration believes that tariffs are going to stay where they are today. They've been very vocal that no, even the ones on China are unsustainable. This is their words, Mike. So assuming that some kind of compromise comes into this discussion, then I think Rick Reeder's right. I think the Fed can be patient here and kind of see how the picture plays out. So it's all about the crystal ball. Does that thing actually work?
Well, speaking of crystal balls, we had Jeff Oak on the show about maybe a month, 6 weeks ago, and he talked about so Jeff is a Long Island chair at Vistage, which is basically a worldwide group of 45,000 small business owners, which we are members of ourselves, and they published the CEO Economic Outlook, Dom. And I know you talk about his visit last time frequently because Jeff's crystal ball basically told us that small business owners are miserable and they're really fearful of tariffs. And that was before April 2nd, right? That was before the you know what hit the fan. And Vistage small business owners like you and I were already fearful that the worst was going to happen. So we said it then that Jeff was going to be on the show quarterly. Vistage just came out with their new report, I think in the last week or two. So Jeff is back with us tonight to tell us what small business owners are feeling right now. I can't wait to
I
hear what
can't
he's got
wait.
to say.
I think we kind of have a pulse on it, Mike. But having said that, no, this is more science than art, and I think we're going to get the real deal here in terms of the most current information on that. So can't wait to talk to Jeff what he sees, how his crystal ball is working.
So we will be right back with Jeff Oak, Vistage Chair on Long Island. All right, I'm Michael Hartzman, back with my partner Dominic Tavella and our special guest this evening, Jeff Oak, local Long Island chair for Vistage, my chair for Vistage on Long Island. Thank you, Jeff. Good to see you again.
Great to see you, Michael. And I feel so proud that I get to be your partner as a Vistage chair.
Thank you. I appreciate that. So, Jeff, let's just start from 50,000 feet in the air. And really, I'm going to use Dom's expression. your talk last month was spot on, right? And it was before April 2nd. I refuse to use the expression Liberation Day, so I'm not going to call it that. I'm just going to call it April 2nd. But even before that, our members, your members, were saying they were basically miserable and nervous and not spending money. So here we are, 4 weeks later, post April 2nd. What are they saying now?
Thank you, Michael. And let me give some context as to what small and mid-sized company owners tell us about the larger economy. We call it the small business sector, but it accounts for 75% of all new jobs and 50% of all national revenue. That is a big segment. So while we call them small business owners, collectively, their voice is mighty. And here's what they're saying. Following the election, CEOs were optimistic about a pro-business tax and regulatory environment. They were optimistic about stabilized inflation and interest rates, and optimistic about increased economic activity. The mounting concerns about economic uncertainty have replaced all those hopes. The increases that we saw in Q4 of 2024, increases in CEO confidence, as much as they spiked up in Q4, they plummeted down in Q1. There's a growing pessimism about the future of the US economy on the part of small business owners. It can be illustrated by a lot of numbers. I'm just going to share one at this juncture, and we can get into some of the others. Is that the percentage of CEOs who expect the economy to improve over the next 12 months has fallen by half. That's a
Wow.
pretty big drop. And the overall confidence index has dropped 22 points. There's no absolute scale to put that in relative terms, but that's a very significant drop in the confidence of small business CEOs.
So Jeff, just you already outlined how important these businesses are to the growth in our economy and how important they are to job growth. But have you got any sense at all about people getting laid off or cutting jobs? I know small business tend to be really, really hard on not letting people go, but have you gotten any sense at all whether they're going to hold on to their employees or are they starting to cut back?
The survey, it's a great question, Dom. The survey is really looking at their sentiment. It's really on their views, their opinions, their feelings, and whatnot. And on every metric, including on workforce plans, their sentiment has declined. So, for example, the number of CEOs that plan to expand their workforce has dropped from 65% to 45%. So less than half of all small business CEOs expect to expand their workforce. And there are even sizable numbers that expect decreases. 14% of CEOs are expecting their workforce to shrink.
So that ties right into the layoff question, right? Even though you may not have hard data, that in itself is pretty telling that they expect their workforces to be less than it currently is.
Yeah, and to give some perspective on that drop, or the anticipation of the reductions in their workforce, that 14% who expect their workforce to decrease, those are the highest numbers since the 2020 pandemic and the 2009 recession. So that's the space that the CEOs are in, and we know how bad things were in 2009 and 2020. Their expectations are comparable to that right now.
So to that point, the word that Dominic and I were kicking around a lot was clarity, that the market needs clarity, investors need clarity. Tonight, Dom used the word unknown, you used the word uncertainty. So are small business owners, are they more concerned about tariffs in general, or more concerned about how they ultimately, not knowing how they ultimately or where they ultimately land?
It's a great question, Michael, and the issue that we've gleaned from our survey data of CEOs across the country is that the biggest factor is the uncertainty. That uncertainty is largely tied to tariffs, uh, but you guys know better than anybody that leaders want to be able to predict in order to plan. They want, even if the situation is bad, just give us clarity about it. But the uncertainty and since our survey, there have been several announcements, repeals, um, and the going back and forth, it complicates planning. It disrupts supply chains. It exacerbates uncertainty, and it's that uncertainty that is so troubling. It brings to mind the character from Karate Kid, Mr. Miyagi, who had the line, wax on, wax off, wax on, wax off. In this case, CEOs are saying it's tariffs on and then it's tariffs off. And it's that uncertainty that has caused pessimism and really a reluctance to act in any definitive directions other than to hunker down.
So, Jeff, I'm not sure how to ask this question, so just bear with me. But when you look at these kinds of businesses, these are very entrepreneurial type people, right? If you talk about
Absolutely.
the small business owner out there, you need a lot of guts and a lot of confidence and a lot of "I will get through this." Yet we have a survey that basically is as black a cloud as 2008 and 2020 COVID. Is that what your survey is telling us? That these people are looking at this picture like we're in the middle of COVID?
So I'm the reporter of the data. I'm the messenger.
Are you surprised? Are you shocked? I'm going to use the word shocked intentionally.
I mean, it was very striking. It was very eye-opening to see that the number of CEOs who are expecting their workforce to shrink in the next 12 months was comparable to those periods. You're absolutely right that small business owners are extremely entrepreneurial. You don't start a small business and put everything on the line if you don't have an appetite for risk, if you don't have an ability to tolerate a certain amount of risk and uncertainty. And when these CEOs and owners are saying, you know what, I'm gonna need to hunker down. I'm gonna need to maybe shrink my workforce, lower my projections of revenue and profitability. I may need to rethink some of my investment plans. Those are significant coming from a highly entrepreneurial, generally not risk averse population of leaders. I'm not saying that every small business is a riverboat gambler, but you don't start a small business without being able to tolerate some risk. And so that's language they understand. It's territory they navigate. And they're saying there's a lot of uncertainty here. There's a lot of uncertainty here.
So, Jeff, let's talk about our own backyard. We're all sitting on Long Island tonight. You chair three groups, one of mine and two others. We are members from the Queens border all the way out to as far out east as we could go. What are your local members telling you how they feel about the economy right here on Long Island?
I think their sentiment is comparable to what we see nationally. In general, the tri-state market, in terms of MSA, metropolitan areas, Long Island is part of the tri-state region. Some say, well, that's not right because Long Island's really different than Manhattan and New Jersey. Yeah, it is, but at a macro level, it's a single MSA region. In general, the tri-state region tends to perform higher or better than the national economy. That's largely a function, that New York City is the financial capital of the world, and that's an engine that's a significant one. I asked in several of my groups how they were thinking about the tariffs, how they were thinking about the uncertainty, and the things that I was hearing from them were very much aligned, Michael, to the what we're seeing in the national data. I'm going to dig into the tri-state data when that's fully available. I'm expecting it to say that the picture through Long Island CEO's eyes is comparable or slightly better than the national data.
Jeff, I'm going to steal one of my. I'm a big fan of Liz Ann Saunders from Schwab. So I'm going to steal some of her lines. Soft data versus hard data. Soft data is consumer confidence, the small business confidence, like you're describing. Hard data is real, the economic. The economic data is really not all that bad. I mean, the potential of it certainly is, but the economic data is not all that bad. If you had to take a guess, maybe not your cup of tea, but does the soft data catch up with the hard data, or the hard data catches up with the soft data?
Wow, you guys have so many good questions. So again, you all know well that sentiment, psychology, what people are thinking, and really what they're feeling at the end of the day is what drives decisions. And just like consumers, we make decisions based on our sentiment. Maybe I can pass on this purchase, or maybe we'll eat in tonight, or whatever the decision's made. Those are very kind of emotional things that really guide decision making. And when people look at hard data that paints a picture that's worrisome, it can inform the soft data, the sentiment kind of things. And conversely, those sentiments drive decision making. So I'd be hard pressed. I'm gonna fudge on this a little bit and say I think it's chicken and egg. There's not one that comes first. I think the influence is bi-directional. What's striking to me, and we talked about this a couple of months ago when I was with you gentlemen, that the consumer data and the business owner data is very much aligned, sending similar kinds of messages, just like individual consumers make decisions. Maybe we'll pull back on some things. Maybe we won't make certain investments, or we'll scale back vacation, or we'll reduce how much we eat out. Just all these very ordinary decisions. Owners are making very similar decisions relating to their physical plan, relating to their capital expenditures, relating to their workforce development initiatives, relating to technology. I think one of the tricky things for small business owners is going to be striking a right balance in any economic condition. There are companies that do well depending on what business they're in, and there are companies that struggle due to the business that they're in. But for many industries, there are always opportunities. And I think for CEOs to be prudent while also looking for opportunities, smart ones, that take account of the uncertain economic conditions, but also recognize that they may need to take certain risks. They may need to make certain decisions in a very strategic manner.
You guys mentioned sentiment and soft data or hard data. You mentioned '08 or '09, I should say, and in 2020. And those recessions were explainable and I think caused by the circumstances we found ourselves in at the moment. Jeff, I would say if we had a recession this time, to your point, it's almost a self-fulfilling prophecy.
Mm. Yeah, I do think there's something to the fact that when the news is dire or people experience it as dire, it affects their feelings. That affects behavior. So there is a bit of a self-fulfilling prophecy that can operate. Um, One of the things that I think it's important to note. So this is one quarter. Um, you guys know as well as anyone, you know, one data point, one quarter does not a trend make. But I encourage folks to focus on facts and data from reliable sources rather than reacting to changes in the news or changes in the stock market.
So you kind of basically set it up for me on a silver platter, Jeff. This data, obviously measuring the mood, but the mood can change, and theoretically it could change pretty quick,
Yeah.
right?
Yeah. Yeah. No, we saw the change, the very quick change in Q4 after the election when business owners were bullish on a lot of things. And then we saw a very rapid change in Q1, and that can happen. That can happen. The question is, what things have already been unleashed that are going to be difficult to get back in the bottle?
So why don't we take a quick break here, a little, and then when we come back, Jeff, we'll dive into a little bit more of the fact patterns in this report about increasing prices and what real action steps business owners are planning to take if we don't get a resolution quickly on these tariffs. So we'll be back after a short break with Jeff Oak, a local Long Island Vistage chair. All right, I'm Michael Hartzman, back with my partner Dominic Tavella and our guest this evening, Jeff Oak, Long Island Vistage Chair on Long Island, here tonight to discuss the Vistage CEO economic outlook. And Jeff, we were just talking about a recession, rising prices, which obviously is in everyone's mind as it relates to these tariffs. And in one chart that you sent us from the report was 40% of business owners who belong to Vistage who got polled, 13% anticipate raising prices 10% or more, and 26% anticipate raising prices 7 to 10%. So 4 out of 10 small business owners feel they're going to have to raise prices between 7% and beyond this year. That's actually in the next 3 months, forgive me. So that's a pretty telling number that prices are going to increase that rapidly. So, obviously, this is going to fall on the consumer ultimately. And the business owner's trick is making sure they don't go out of business. And it's that fine line, right, between raising prices to survive, but not raising to the point where consumers aren't going to buy anything.
Yes, that is a striking slide that you highlight, Michael, and a couple of cautionary things that we've learned from a lot of research over the years and experience in over 45,000 companies, small and mid-sized companies around the world, most of which are in the U.S., is that although we've become at times a little numb to rising prices, which are generally more modest than the numbers that our data is showing, it doesn't mean that buyers won't react, whether those buyers are businesses or other customers. It's important to be able to justify, any business needs to justify the value that they bring, and focus on that. And in general, consumers are more amenable to small increases rather than one big one. That tends to get people's attention. Think about the eggs situation and some other products in history. And I think leaders are going to have to be smart. Their prices, they expect their prices are going up. They're going to need to hedge for that and address that. And they need to do it in a strategic manner, in a wise manner, in a manner that's attuned to the sentiment of consumers, right? Because the CEOs we're seeing, their sentiment is a substantially diminished optimism. Consumers are feeling the same way, and I think wise business owners may need to deploy customer service teams and clear communication plans to handle difficult topics. This is a tough thing to talk about, tough thing to break to buyers, whether they're consumers or fellow businesses. In B2B business, a business is going to be charging higher prices to other businesses. So it's a tricky thing to manage.
Jeff, we certainly can argue that at least half the population in this country has had it. I mean, they are at their limit based on savings and saving rates and maxing out their credit cards. So there's a lot of resistance. I believe there's going to be a lot of resistance to these price increases. And you got to believe some price increases are inevitable. There'll be some tariffs that'll be there no matter what. So is it a situation where the small businessman is going to have to eat it or lose market share or shutter their doors? How dire do you think the situation is?
Well, I asked that question in one of my CEO groups, and I said, how are you going to deal with this? First, I asked, what they were anticipating in inflation, and it is comparable to what you see in the data that we've been discussing. And like the CEOs in our national survey, my members are saying, in some cases, they're going to eat some of the costs. In some cases, they're going to need to pass on some of those costs to consumers. And in a third category is doing a little bit of both. Um, I think for certain industries and certain companies, it's going to be very tough for them to swallow all these, to eat all these costs. While tariffs are the biggest factor in their mind in the survey, there are also some strategic pricing increases that need to account for wage increases. You know, there's a talent war out there. Many refer to it as a talent war, and attracting and retaining top talent is an imperative for businesses. So tariffs is the biggest nut that owners are experiencing right now, but they're also looking at a workforce that they want to retain, to provide good service, to produce excellent products. And so the small business owners are really getting pinched from a bunch of different directions here.
Jeff, I couldn't agree with you more. And Dom, you said people have had it. And here's what's interesting to me. The people who have had it wear red hats and blue hats, right? Small business owners come in all shapes and sizes, all political affiliations. But when you start messing around with someone's bank account and someone's future to put food on their family's plate and their employees' families' plates, because let's face it, small business owners, and maybe I'm biased, really treat their employees like family more than a Fortune 500 company, in my opinion. So this is really personal. Like, I think, Jeff, the answers you're getting are personal. Getting back to Dominic's point, this may be soft data, but this is real, right? This is not coming out of a textbook at Princeton.
It is the sentiment of people in real time who are running real businesses. And I really appreciate your comment, Michael, about the personal nature of decision making, and the personal dimension of caring for families. I do one-to-one executive coaching with the CEOs and owners that I work with, in addition to doing peer groups. And I had several one-to-ones this week, where the CEOs weren't just talking about their own families. One guy said, I have families, plural. I have families to feed, the families of my employees. I got to make sure they're well taken care of. So they stay with us, and are engaged in the work when they are here. And so it gets to your point. And the person who said that, it is not a family business. So it wasn't a generational business. But I was struck by the fact that he said, I have families to feed, and I'm worried about that.
So Jeff, we're literally in our world where we're dealing with these business owners on a day-to-day basis. We're seeing, hey, I literally have one of my biggest clients. We have a hiring freeze. So right there, we're not going to hire anybody until we have clarity. And then the next stage is, hey, these guys are retiring. I'm not going to replace them. I'm just going to ask the rest of my work. So this is very deliberate stage. They don't want to get to the point where they have to lay somebody off, but ultimately they may have a proverbial gun to their head and they don't have a choice, right? You got to have the business survive.
Yeah, we really like using the term strategic pricing, because it puts the emphasis on the strategic. We need to be leaders of small businesses, small and mid-sized companies, need to be very thoughtful about what they do with their prices, how they do it, when they do it, the manner in which it's communicated. And it's gonna take a lot of creativity, a lot of tact, a lot of sensitivity, a lot of data-driven reasoning to do this well. And leaders need to look at strategic pricing in a proactive manner, to your point, Dominic, not waiting until things start heading south with cash flow, with the ability to make capital investments, with giving employees the salaries and regular annual increases that most people expect. They're going to have to be really thoughtful, but this is not something that they can avoid. It's actually one of the items that we recommend based on the data. We recommend certain actions based on CEOs. I think I shared the first time we were together that when I approach data, I like thinking about three things: the what, which is the data; the so what, which is what the data means; and the now what, which is what do we do now that we understand what the data means. The what, the so what, and the now what. And in our survey, we always share those now what recommendations. And one really key one is for small and mid-sized company businesses to implement strategic pricing. No specific recommendation of what it needs to be, but it needs to be done to offset the inflation that we anticipate, but also to preserve basic margins.
You use the expression proactive price increases, not only to offset inflation, but also to preserve margins and make sure pricing decisions are backed by value and competitive positioning. I guess that's what you mean by that.
Yes, yes. And if a small business has a competitor and they're going neck and neck in the market, and they could lose market share, they got to be a lot more mindful than someone who maybe enjoys significantly more market strength, market share, who maybe is in a good cash flow position. So it's the competitive positioning where not only where is your business, but where is your business in relation to your competitors?
Jeff, I'm curious, and literally again, firsthand, I ended up going to a retailer the other night to get something, and I'm looking for somebody to pay, and there's nobody to pay. There's a machine, and you scan. Are any of your small businesses talking about incorporating or bringing in more technology to help them with the cost, and maybe not necessarily hiring a human being to do the job?
Very much so. I can't think of a single CEO and owner who is not thinking about the role of what should the role of technology be in the present and in the future, and especially AI for productivity gains. I think while AI has not delivered yet broad productivity gains, I think the very smart companies that I work are piloting targeted uses. AI is going to be a net increase in cost, even when you successfully deploy technology through automation. To make the investments that are going to need to be made, it's going to be a marginal increased investment over what it currently takes to run. The savings in paying people are going to be plowed back in, not to the profit line, but into investing in that technology to make sure that it's serving the company's business purposes. Some people think AI is this magical thing that's just going to make costs go away. No, you got to look at what your business processes are. You got to look at where your inefficiencies are. You got to look at the things that can be automated, and that's where you need to invest. It's not ChatGPT isn't going to do that for you. It's going to take more sophisticated technology that's targeted based on your specific business. I have a number of members for whom the vast majority of their business is very human intensive. Coffee shops, for example, there's not a lot you can automate. You can't automate somebody making a cappuccino. Are there some things you can automate on the back end? Yes, but nothing like other businesses that rely extensively on the exchange of data that can present opportunities for automation.
You know, Jeff, about 10, 12 years ago, robo advisors was supposed to take mine and Dom's job away. And I remember, I'll never forget this. I was in California and Dom calls me at a clear blue, not at a clear blue sky. We talk all the time, but he knew I was in California. Calls me up and I'm in California. I'm on vacation with my family. At a clear blue sky, he says to me, "Are you worried about robo advisors?" I said, "You probably don't even remember this." I said, "Not in the least." He said, "Me neither." And that was the end of the conversation. And and here we are 10 to 12 years later, and it's a thing, but it's not really a thing, Jeff. But even us have to, we have to embrace AI for other reasons, for the access of information that we have. So yeah, AI didn't take our jobs, right? But we are finding uses for AI that just make our jobs easier today.
Yeah. What? Yeah. Yeah. And I think there's a distinction. One of my technology members has um, uh, uh, provide a distinction that I find very, very useful. There are robotic assistants, and then there are robotic workers. Robotic assistants, ChatGPT, it's an assistant. It helps us make decisions. It helps get us information, which I think is what I'm hearing from you, Michael. Um, and there are certain businesses that also have remote workers, or robotic workers. These are machines that can automate certain kinds of processes. And you can't really generalize, but it depends business by business, company by company. But what I hear you saying is that AI can help you do your job, but it can't do your job, and that's the case in a lot of areas. Not all, but in a lot of areas, that's the case.
Hey, Jeff, we're running into the end of the show, so I want to see if I can sneak this question in. So you've brought up a couple of times how the survey, the mood jumped very, very greatly, a lot
Yes.
after the November election. What was the mood just before the election? What was the mood of the market, of the economy, and the small business owner? What was the mood before the November election?
Well, there was a lot of concern about inflation. And, you know, candidate Trump leveraged that and promised to address it. And I think it's been tougher. And so that was the mood before the election. After the election, as I said, business owners were very optimistic about a lot of things, including inflation, which is why tariffs, I think, have really taken a lot of people by surprise. Um, I hear people say all the time, well, he said he was going to do that. Yes, yes, he did. But the scale and the intensity and the depth of the tariffs, I don't know a lot of people that were expecting, 100% tariffs, 120% tariffs on certain countries. And
Jeff, we speak to Wall Street all the time. They were not expecting this. Let's
yeah,
be honest. The
right.
smartest people on the street were not. And you would think the most plugged in people in this country were not expecting the magnitude of what we're seeing right now.
Right, right. Yeah, so that's what our survey was saying, without getting into a lot of the fine details, but that's what the survey was saying prior to the election, is that inflation and immigration, but from an economic perspective, inflation was top of everyone's mind.
So Jeff, I know you're not a gambling man, but if you had to make a bet when we do this, God willing, in about 90 days, what do you think the confidence index will be saying then?
How about if I share my hope?
Perfect. There you go.
My hope
Well,
is that
well,
is
thank
that
you.
is that there'll be a little pumping of the brakes, maybe a lot of pumping of the brakes on tariffs. And my hope is that we can see some improvement here, because, like you, I worry about recession, the R word, and I think business owners are sending a very loud and clear and aligned response that they're very concerned by the uncertainty. I hope we get some stabilization and a dialing back of some of these tariffs.
Excellent. Thank you, Jeff.
My
Jeff,
pleasure.
thank you as always for your insight, and we'll see you down the road. We'll see you in the middle of the summer, my friend.
Okay, my pleasure. It's always great to
Looking,
be with you guys.
looking
And
forward
we'll
to a more optimistic
Yes, me
outlook
too.
on the next call here.
Me
and
too. Remember, I'm the messenger.
yep, don't shoot the messenger. We got it.
Okay.
Dom and I will be back next week with a new edition of the Lebenthal Report. Have a good night.